I think that market auction theory is a super important concept that not a ton of people really have a firm grasp on. So market auction theory is basically the theory that every market is a continuous auction. There's always buyers, there's always sellers. We're always engaging in a back and forth exchange to determine what the fair value is at any given time. Prices are going to move to facilitate the trade between the buyers and the sellers. And as the buying and selling starts to balance, prices are going to consolidate. And then when there's an imbalance, prices are going to move aggressively to find a new balance. That might not make complete sense, but as we bring in more examples, it'll really start to crystallize here. Essentially, we are pulling back the curtain behind consolidation and expansion, and we're kind of pinpointing how big money looks at those concepts. Let's get into some examples here. There's three general market states. So you have a balanced market, bullish imbalanced market, and a bearish imbalanced market. So when you have a balanced market, like Bitcoin right here, it's going to be essentially trading sideways. We have a fair value established right at the point of control in the middle here, and it's just kind of oscillating around this fair value, keep seeking it, right? So until we break away from this range, it's a balanced stock that's just trading right in this range, right, kind of oscillating around the fair value. That's what balance looks like. So just an extended period of sideways action that's moving around a key level. So when you have an imbalanced market to the upside, it's going to look something like this QQQ chart here. So as you can see, we're just in a channel, just ripping on up. Sure, there's red days, but the overall trend is very clearly up. Price is seeking balance higher and higher. So these kind of bands here, they were previous fair value points of control where it was oscillating. And then essentially we reached an imbalance where the bulls outpaced the bears in this range. And then we started seeking price higher. Then we see the same thing here, consolidation around one level. We even push higher and then retest it and then surge even higher. This kind of stair-stepping approach of pushing new highs, back testing to find support, pushing new highs. That's what an imbalanced bullish market looks like. That's what you'd like to see in a stock that you're in. This is what you don't want to see. This is a imbalanced down. And what this looks like is just more sellers than buyers. Prices fall to attract buyers at a lower price, but in general, beyond it had this big base that it was trying to base out and push up off of. And then it couldn't find enough buyers. Sellers were outpacing the buyers. And eventually that just led to an absolute breakdown through this volume shelf, through this point of control. And it just came down until it found buyers at the next big level down, this $4 level here. These were new lows for this chart too. So this is like price discovery to the downside. You never want to see that. That's very bearish.